Right, now we're going to talk about Old Mutual, which of course is a global player, founded in Cape Town back in the 1840s, internationalized its business about 20 years ago under its management team, following on from the demutualization that it concluded in about 1990.
Must be 96, 97, wasn't it?
Maybe slightly later. In any event, it's now in an interesting phase because its new CEO, Bruce Hemphill, is preparing the business to be split into 4 constituent parts. We'll talk about those in a little bit. Market capitalization, 164.8 billion rand. Price earnings ratio 14.85, dividend yield of 5.54%. So Wayne, just take us through what the bits of this unbundling are going to be.
But look, what they're saying is we're coming back home. We're going to unbundle the Nedbank, we're going to keep Old Mutual South Africa.
So those are the 2 local bits?
2 local bits, then the overseas bits, the UK business, and then the US business.
And the US business is basically an asset
It's
management
asset manager,
business,
and that's almost
easy
out.
enough.
Yeah.
It's been floated on the market already.
Yeah.
The UK wealth management businesses, some businesses they acquired, and that they're thinking that they might be able to sell to a trade buyer.
Yes, it could easily be, but this was probably, I think, the most catastrophic offshore move by a South African company. They destroyed
Jim
value.
Sutcliffe basically thought that that was the way to go, go global.
Well, you were going global because the rand was collapsing around your ears when they went global, and all of a sudden the rand went from 14 against the dollar to 650.
Yeah.
You know, so that wasn't too good. And they bought right at the top. They couldn't have got their timing worse. They bought right at the top. When they expanded in the US, they bought it just before the financial crisis happened.
And then they had policies which they'd underwritten and written, which were underpinned by market assets which were found to be inadequate.
Well, what happened was, to enter the market, you've got to give a better deal than other people. So when other guys are giving you a 4% annuity, you've got to give investors a 4.5% annuity, and the only way you could meet that extra 0.5% or 1% was to buy junk bonds that yielded a higher level. And of course, they were all triple rated until they all went bankrupt. So they had to recapitalize their global business. Quite frankly, it was an unmitigated disaster.
The assets that they bought in the UK, though, more private client wealth management businesses, those are fine. They'll find their own
They also
space.
bought in the Scandinavia and Scandia and everything like that.
And then the South African business has been strong. I mean, that's a solid operation, very good sales distribution force, lots of life policies, lots of employee benefits,
Unfortunately,
lots of assets
a
gathered.
little bit ex-growth. The whole of South Africa life insurance
But they have all the East
ex-growth.
Africa, West Africa businesses as well.
It's coming on, but I mean, in the commodity down cycle, they're not looking particularly good.
marvelous.
But there's no danger there. There's no long-term threat or problems.
But
So
Hemphill reckons that it's an absolute waste of time having the big global business because no value's added at
No
the core.
value's
So
added
it's
in the
going to be
centre.
unlocked. Its share price, though, reflects that it hasn't really done too much for its shareholders.
that's in pence, eh?
That's in pence. Okay, that's interesting. I was wondering why the hell that looked like that. What we'll probably do is jump and show the share price, which should be at around 36 Rand on the local market while we're busy doing this. They'll add that.
Now the big discussion is, what's the unbundled company worth?
Yes.
We know it's worth more than the current 30, 40 Rand a share. We know this.
Yes.
Is it 60 Rand? Is it 50 Rand? But there is clearly an unlock value in all of this.
Because then they'll lose the head office. And Hemphill is cutthroat. He says these people are going to
hundreds
go.
of millions of pounds that are just going to disappear. And you get more focused valuation. The SA business is a good business. It might be, as I said earlier on, a little bit ex-growth, but it's a fundamentally good business.
But it could take 2 years or something.
2018 is the date.
And it's going to be tricky because the foreign shareholders don't necessarily want to own the local stuff and can't necessarily own Nedbank, and Nedbank is going to have to be unbundled.
Look, this is one of the biggest exercises around, but it's also, quite frankly, one of the biggest value unlocks we're going to see in a long time as well.
So that sounds as though you think it's a good opportunity
I'm
now.
positive, yeah.
You're hot
I'm
on it
hot
now.
on this one.
Okay, I'm going to give you the benefit of the doubt, that one, and go ahead. Yep, hot too, because Bruce, like I say, has got dry eyeballs. He's not worried about saving those costs. He's marching in, and I think they'll get to the other end of that process. We have discussed it on the show before.